presentation contains current opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone, this is the Compak Asset Management YouTube update for September the 12th, 2023. I am Mo Ansari, President of Compak Asset Management and host of Market Wrap, and you can get the daily broadcast simply by going to the Apple Store and downloading it, where you can just type in Market Wrap with Mo Ansari. It's one word, type the whole thing in, and you should be able to get the entire broadcast every single day. Download it to your iPhone where you can listen to it at your convenience. Today's agenda, we're going to talk a little bit about the market, the economy, take a look at the technicals and the week ahead. The big news this week obviously is going to be the CPI. That comes out tomorrow morning, expected to be around 0.2%. If it's less than that, that would be good for the market. It'll take the pressure off the interest rates, which are at a point. They are at an inflection point where either interest rates are going to break out to the upside, and if they do, you know what happens to the market. It's going to pull back because we have to reprice everything. But looking at the yield curve, it's starting to steepen, which is a good sign. And that means that may indicate a soft landing. That means the difference between the short-term and the long-term rates is coming down. So we're also looking at the loan balance delinquencies. They're sharply rising. So there are signs there that the economy is slowing. But it's not slowing dramatically like the Fed expects, like everybody expected last year that we would see a recession. I believe that we're going to continue to see muddling along is what I expect to see with a continued decline in inflation, which is the Goldilocks scenario, where we don't go into a recession, we don't go get a dramatic pullback in the economy, we don't have unemployment going up dramatically. At the same time, we've got inflation coming down. If that happens, that would be perfect. But we have to wait and see. Tomorrow's CPI is going to go a long ways in determining that. The core rate is the 0.2, and that's what we have to watch very carefully. Consumer sentiment is very bearish right now. We're sitting at a very low level right now. Not a lot of people excited about the market. Well, it's August and September. September, usually a bad month. That's where we come in, usually put in a bottom somewhere in the end of September, beginning of October, and then we have the rally for the last quarter. We've just gone back and forth in this market. I will do a couple of live events. I'm going to do a live webinar. That's going to be on the 19th of this month. Then we have a live seminar in Scottsdale where I will be there on the 18th. You can go and register on both of these by simply going to the Compak website /seminars, and you can go there. And they will, that's where you can register. They're all free, no cost or obligation, and learn. And I'll try to answer as many of your questions as I can on the webinar. Looking at the technical indicators, markets just bouncing right around here, which is the 50-day and the 20-day moving average. That's where we are, just going back and forth. Either we're going to break out, we have to break out above last week's high, and then break out above 46.07, and that's the 46.07 high that we made. If we can get above that, that would be very good. Then it's last March high of last year. If we can get above that, then we're headed much higher. Obviously, we'll have to wait and see until we see that. The support is still 20-day and the 50-day moving average. That's where we are going to see the support. Long-term weekly charts, each one of these vertical lines is 1 week of trading rather than 1 day of trading on this chart. This is the 20-week moving average, which is at around 43.80. We closed at 44.61 today, so we're still holding above it. If we can get above the 46.07 high, 46.37, that would be definitely very good. So we're waiting and watching to see what happens, and the inflation number tomorrow is going to be the driver. That is going to drive the market dramatically tomorrow. Nasdaq also support at 13.8, resistance 13.878, which is the we closed at 13.773 today. That's the 50-day moving average. Nasdaq usually doesn't pay a lot of attention to the moving averages, but the overall structure after making a fifth wave high, we're just going through this ABC, and that's just getting rid of the overbought condition of this huge rally that we saw since March of this year. So it's just sort of this whole area right here, last couple of months, month and a half, have been sideways, which is August and September. That's really a nice way to go about doing it, where we go through the sideways rather than come back down dramatically. As the weekly charts, as long as we're above 13.4, which is the 20-week moving average, which is good, 14,450 is the high that we need to get above, and if we can, that would definitely clear to the upside. 10-year note, this is the one number that I've talked about, and this is what last October we got to 4.33. We went again, we got above it just a little bit right here, then came back down. We closed at 4.264 today. If we break out on rates to the upside, that could be, if inflation comes out higher, that means the Fed will have to raise rates. The chances are, at the meeting coming up later on this month, 93% probability they're not going to do anything. The question is, is this another pause, or is the terminal rate? Is this the end of interest rate increases? That will only happen if inflation comes down and unemployment starts to go up. So we have to watch the inflation number tomorrow. It'll give us some hints of what to expect in November. That's the next meeting, if they're going to raise rates or not. If inflation continues to come down, I think the Fed is done. That could be bullish for the market. Gold chart, again, just sideways right here, about 1975 to 1950 or so, closed at 1935 today. 1925 is the 200-day moving average. Then we have resistance at about 1950. Gold sort of stuck in the middle right now. If we do get inflation numbers higher, interest rates go up, push the dollar up, that pushes gold down. That is the correlation. If you see inflation lower, that could be bullish for the gold market. Oil has been the one flying the ointment. The Saudis have been cutting back production. They extended the production cuts by 1 million barrels a day till the end of this year. That'll put us in deficit in the last quarter of this year, where we'll be producing, OPEC total production will be about 3 million barrels less than what the world is consuming, and that could keep pressure on the upside. Or if the economies start to pick up, the Chinese economy, the European economy, which are, again, the Chinese the largest importer of oil. So if those start to pick up, that could push demand up also, but we'll have to wait and see. Oil has really gone up from the $60 barrel to where it closed today, at really 89, close to $89 a barrel. Next resistance is here. This is the high that we see around 93.75. Support is right here, which is the 20-day moving average at about $83 a barrel. So I think some kind of easing of inflation, but oil looks like it could be the fly in the ointment that could put some more upward pressure on inflation. So we'll have to wait and see how things turn out, especially tomorrow morning with the CPI. On Thursday, we get the PPI and retail sales. On Friday, we get the University of Michigan consumer sentiment data. So we have a lot of data coming out over the next 2 or 3 days. If you need help with your portfolio, go to compak.com, set up an appointment. We will be more than happy to sit down with you and develop goals, then an analysis of your risk profile, and then the portfolio. What are you trying to do? How much risk you should have financially and emotionally that you can handle, and then a profile, a portfolio to match. We do that entire process, and we can do that for you simply by going to compak.com. Have a wonderful week. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.